The Governing Council decided to restart net purchases at a monthly pace of €20 billion as from November 1st.
European Central Bank President going back to the toolbox, bringing back quantitative easing, otherwise known as money printing, even taking negative yields even lower. This putting more pressure on our Federal Reserve to cut rates at their next meeting next week. President Trump, meanwhile, has a message for Powell. The ball is in your court. Tweeting European Central Bank acting quickly, cuts rates 10 basis points. They are trying and succeeding in depreciating the euro against the very strong dollar, hurting U.S. exports, and the Fed sits and sits and sits. They get paid to borrow money while we are paying interest. Want to bring in capital wealth planning market strategist Jeff Sott. Jeff, I thought it was a fascinating, bon voyage by Mario Draghi. He took shots at everyone, particularly European economies and fiscal policy. But it also, to me, seems to put a lot of pressure on Jay Powell.
Yeah, I agree with that. I would say that Draghi's policies probably prevented a depression in Europe, but they certainly have been abjectly didn't work, I should say. Inflation hadn't come back, growth hadn't come back, and the fact that he's telling corporate Europe that interest rates are going to stay lower for longer actually encourages the corporations to do nothing, to sit on their hands and wait, which is not the way you rekindle growth.
Well, Jeff, you know, he said, listen, we see he wants a significant increase in inflation. He says they're continue to be ready to make adjustments with all their instruments because he's worried about persistent downside risk. And he says that negative interest rates have had been a very positive experience so far for Europe. So he's backing his track record. He's saying for the most part that the ECB saved Europe, that they created 11 million jobs and they saved Europe. And it's time for governments there to do some pro-growth policies.
Yeah, I don't disagree with the fact that he saved Europe, Charles, but the fact of the matter is his policies haven't worked. It hasn't rekindled growth. It hadn't brought back inflation. It has depreciated the euro vis-a-vis other currencies, which should help in the longer-term scheme of things. But I'll say it again, keeping interest rates lower for longer is not the way you get corporate Europe to re-stimulate itself and have growth come back.
So where does that put Jay Powell, in your opinion, in your thoughts? Because obviously Jay Powell's got a lot on his plate, way beyond the dual mandate.
Yeah, I agree with that, too. I think you're going to cut interest rates by 25 bips next week. Quite frankly, with what I see in the economy, I don't think interest rate cuts are necessary, but I think he's going to bow, if you will, to the wishes of the president. I don't think negative interest rates, which is what President Trump is talking about in this country, I think that would be a disaster for the U.S., but I do think they're going to cut next week.
How much further down? Okay, I mean, you don't like negative rates, but is it a possibility that we could ever get to zero or less?
Yeah, certainly. Markets can do anything. It's certainly a possibility. My hunch is that he cuts 25 basis points next week and then sits on his hand for a period of time and see what is reflected in the economic numbers.
All right. Well, I got to tell you, that was an extraordinary press conference. Hey, Jeff, always a pleasure to have you on the show. We appreciate your expertise on all this stuff.